Hey, what's up, everybody? Welcome back to Market Misfits. We're looking at coin market cap. So the halving is basically just hours away, I believe. So from what they're saying in this article, we're going to be covering this article in just a minute. Also, we're going to be looking at the Bitcoin chart. So we just dropped this inside of the group. Actually, we've been following this on the 4-hour time frame for Bitcoin, and we've been paying attention to this descending channel into support, as this is a setup that we've been trading quite frequently, but we have not been trading it much as it's in a range. And with the Bitcoin having only hours away, a lot are speculating that we are going to see a drop in price and a long period of consolidation, because typically that's what's happened on previous Bitcoin halvings. So what's going to happen this time? Only time will tell. Let's take a look at the crypto market real fast. The fear and greed index for Bitcoin is at 59. So we're a little bit in the neutral right now. Bitcoin is still down on 7 days, on the week, 3.5%. Ethereum's down 3.5%. Binance is down 5%, almost 6%. Solana almost 5%. XRP is down nearly 8%. Dogecoin is down almost 12%. We have Cardano down here, down 5%. And Toncoin is down 8%. Wanted to cover this article here from the Crypto Basics. So we're gonna be going over the top Bitcoin predictions after the Bitcoin halving. And one of the reasons why I wanted to cover this is because they've pointed out something in here that's pretty important. I know a lot of people, especially people that are new to cryptos, are expecting the crypto market just to take off because of the halving, but that's not what's happened the majority of the time. But at the same time, we have different things that are driving the market, as the ETFs have continued to fuel the market on a record scale. That's why we've seen all-time high already before the halving. This is the first year that this has happened. So there's that to think about. And then also we have a war that's going on. So we are closely monitoring the war and keeping everyone up to date inside of our free private group, Market Misfits Academy, on Facebook. If you're not in the group, be sure and check us out. And when you do come to the guides in the files section, and be sure not to miss the news feed, for we're dropping news and analysis in here daily and keeping everyone up to date. So let's continue on with the article, and then we'll get into the charts. With the upcoming Bitcoin having stated to occur in the next few hours, we've compiled the top predictions for Bitcoin price after the highly anticipated event. Bitcoin having, one of the most anticipated events in the crypto industry, is imminent. According to CoinMarketCap, this season's long-awaited halving will occur in the next 12 hours. The event, which takes place every 4 years, is designed to reduce the rate at which the new Bitcoin is created by slashing miners' rewards in half. Bitcoin miners' rewards will be reduced to 3.1125 Bitcoin per block compared to the current 6.25. Interestingly, most Bitcoin proponents believe the halving mechanisms help bolster Bitcoin price in accordance with basic economic principles. The principle notes that lower the supply rate of a commodity, the higher its demand, thus leading to a surge in its price. Bitcoin historical price during halving. A popular crypto proponent, Rizzo, took to X to highlight Bitcoin's price during each halving event. According to Rizzo, Bitcoin has continuously added a zero to its price since the first halving in 2012. The first Bitcoin halving occurred in 2012. Bitcoin changed hands at $10. During the second and third halvings in 2016 and 2020, Bitcoin traded at 650 and 8,800 respectively. Here he's kind of given the layout here of what he's noticed through his analysis. With the fourth halving imminent in a few hours, Bitcoin was trading at 64,842 at press time, up 3.42% over the past day. Based on Rizzo's observation that Bitcoin usually adds a zero to its price during every halving, a unit of Bitcoin could be worth at least $100,000 at the time of the fifth halving, which is slated to occur by 2028. Historically, Bitcoin usually witnessed a spike in price several months after. So I really wanted to highlight this right here and just be ready for this. Not saying that this is going to be what happens this time, like I said, we have different drivers in the market. We have institutional involvement on a scale that we have never seen before. So with this being what is common to happen and taking that into mind along with the ETF inflows, you know, anything could happen, especially with the war going on. So just FYI. Each halving event, for instance, Bitcoin was traded around 8,800 during the third and last halving, is currently worth 64,842. This indicates that Bitcoin price has surged 636.84% since the last halving. Top prediction for Bitcoin halving. Interestingly, several market watchers and experts have projected that Bitcoin will follow the same pattern of previous halvings and embark on a jaw-dropping rally. Many of these experts project that Bitcoin could surge as high as 150,000 after the highly anticipated halving. This prediction is supported by such experts as Thomas Lee, Fundstrat's head of research, Mark Yusko of Morgan Creek Capital Management, Standard Chartered, a leading financial institution, and Bernstein, a top asset manager. In particular, while Lee and Standard Chartered expect Bitcoin to hit 150,000 price level by the end of the year, Yusko and Bernstein speculate that their 150,000 prediction for Bitcoin will come true by 2025. Furthermore, Robert Kiyosaki, the author of the popular financial literacy book Rich Dad Poor Dad, asserted that Bitcoin will reach a price target of 100,000 by June 2024, 2 months after the halving. So he's predicting that, I'm assuming this kind of looks like he's assuming that it's just going to continue up from here. A lot of people are speculating that it's going to drop, and we'll see several months of consolidation because that's what we've seen in the past. Last month, Michael Novogratz, the CEO of Galaxy Digital, believed Bitcoin will hit a target of 100,000 this year. Meanwhile, legendary trader Peter Brandt set an audacious target at 200,000 for Bitcoin this season's bull cycle, expected to materialize after the halving event. So one of the predictions that they're not putting up, that they didn't put on here, and I would think that they would have put it on here, is Brad Garlinghouse saying that the market cap is going to double. So I'm kind of surprised that they didn't mention that in here, but oh well, let's get on to the charts. Here we are back at the Bitcoin chart. We are looking at the 4-hour where we had our breakout. This spike down right here was actually from Israel attacking Iran. So they hit some targets from their military base there in Iran. So right around that time, that's when this happened. It's actually, I think this was last night this happened, but you know, we're seeing this as a liquidity spring. So a lot of times before the market goes up, you'll see it shoot down to clear out leverage traders and to absorb their orders and to push the price higher. Usually this is a precursor to a price escalation if we're seeing it on the bottom. Now, a lot of people are really thinking that we're going to go down and see consolidation, but one thing that we're looking at as a possibility is that we will go up, or that we could go up. And again, not financial advice. We could see something like this happen. We could actually see Bitcoin come up and claim this resistance as support and go on to mark a new all-time high. I'll take a little bit of zoom out and look at this range that we've been in right here. So at the top of this range, a close above 73,387 on the 4-hour candle, that would break the very top of this resistance. We have the majority of this resistance down here, this spike being a support. As we broke through, came down, got a long rejection right here. We had a long rejection right here. These rejections, boom, boom, catch the candle bodies, rejection right here. We get more stronger rejections off the top of this. And one of the reasons that we choose to draw our resistance and supports this way is so that when we get a candle going up, if we do get a candle going up and sets, then we come to a more definitive answer as to whether or not if the supports or resistance are broken. Now, this is just the way that we do it. And there's 100,000 other ways that people do it. You know, this is very speculative when it comes to how to draw trends and how to draw support and resistance. Just like this channel right here, for instance, one of the reasons why we draw through these wicks a lot of the times, we're looking for the most touches, number one, but we're also needing to come to a decisive answer as to whether or not something's been broken or not. So just because, for instance, like when this candle came down on the 4-hour, this is not a break to us. Because a lot of times we're going to trade a breakout, and we don't want to trade a breakout as price is still deciding what it's going to do. So we like to look at the close. So while we hug these as tight as possible, try to get as many candle bodies as possible, while also utilizing wicks. If we can catch the tips of these wicks here, we're going to zoom into the 1-hour and we're going to take a closer look. We also just posted this inside of the group. So here we are on the 1-hour, and you can see this rejection here. This is an indication that buyers or bulls are hungry down here. Maybe some people are probably defending some positions. So we got the break of the neckline right here. This is also in alignment. If you're wondering what trading strategy we're going off of, we are just using confluence with price action patterns and the economics or the what's driving the market. So having a basic understanding even of what's driving an asset, and you put that in confluence with price action at key levels patterns, then you're going to have a pretty solid setup once you get it down. So that's what we focus on, focusing on the macro view, just like with the war happening and the halving happening, all this stuff put together, interest rates, all this stuff put together, having a generalized idea, but for sure idea of the sediment, and then finding price action patterns in confluence with levels and trends to come to our decisions again. So not financial advice, just sharing a little bit of how we're coming to these possibilities when you see us drop them. But one thing we'd be looking at here, we got a double rejection on the hour to the neckline of this inverse head and shoulders. So we had a sign of strength right here. So this is based off of the Wyckoff method, actually. So we had a sign of strength break us out of what would be considered an accumulation. Some would probably argue to take it even as far back as this, to call this an accumulation. And then here would be our sign of strength, SOS. So we got a sign of strength right here. It's basically saying, okay, traders are done accumulating, investors are done accumulating. It's time to start driving the value of the asset up so that they can cash out for a premium. Now, this is pretty much textbook as far as Wyckoff goes. We use a simplified version. A lot of people will go into every single one of these spikes and name them off A, B, C, D, whatever all the numbers and stuff are, but we just focus on the fundamentals of it. So one of those fundamentals is a liquidity spring, and that's what we're taking this as right here. So we just barely cleared out this low. So anybody that was going long at the breakout was wiped out. Most likely a lot of people were wiped out. Retail was wiped out. And then we got our sign of strength. We got two nice clear rejections right here at the neckline where we'd like them to be. So this is almost looking too good to be true. And there's a really good chance that it is, with our scenario, with us going up and clearing out liquidity, because there's a bunch of people going short right now. And a lot of their stop losses are up here, but there's liquidity all through here. So would not doubt at all to see this come up and drop. And it wouldn't surprise me either if we saw something different this time, because of the different things that are driving the market. So there's already issues with the supply, and now we are cutting that in half. So, for this to play out and for us to claim the resistance as support and continue on would not surprise me one bit. Though right now we are looking for one thing that would make us have a higher conviction right here is if we got a break of this structure right here. So this structure is a wedge. We're going to see this as a wedge, a descending wedge. We'll be looking for a break of this, or more simply put, we'll be looking for an engulfing on the hour. But we have 37 seconds left. If this candle happens to break up out of here, then there would be a stronger chance of us continuing up from here. But how far will we go? We'll just have to wait and see. Maybe we don't go at all. Maybe we just drop straight through the bottom and go into and see the market give us what a lot of people are expecting. More experienced traders and investors are expecting, a lot of them I know, they're expecting something like this for us to drop down to around 50K and then see a period of consolidation for several months. And really, I really hope that they're right and we do get to see this, because if we do, then that is more time to accumulate before the big run. So, just keeping all this in mind, we never know what's going to happen until it happens. So we are just taking this one candle at a time and keeping a close eye on this. When we see our setup, we take it as long as it has all of the indicators that we need. And right now, this one's looking like a pretty strong candidate. So the hour candle just now closed, and we did get a bullish engulfing right here. Still looking for a break of this trend. Really be looking at this point here. Excuse me, in this point right here to break into 65,000 for us to continue up. And then what we'll be looking at for a high up in here, to say if we went to the resistance, then we'd be looking at around 70K. So about a $5,000 gainer. We're going to be looking at maybe possibly a $50,000 Bitcoin. I wanted to look at XRP. We're looking at the XRP chart. So we also just dropped this inside the group a little bit earlier. We've been in a state of consolidation here on XRP, and we have not been able to break out of this. Let's go to the 4-hour time frame. This is one way to look at it. We're going to show you another view that we had and we dropped inside of the group. This is one way to see it, a simpler way to see it. We have a support and a resistance, and well, we're looking for a breakup out of this. Another thing that we're looking at is this weekly trend. So this weekly now, since price is underneath it and it's attempting to break up over it, we're at a resistance trend and a pretty serious resistance zone. This is one of the more prominent support resistance zones that there is for XRP. A lot of people, I know a few people, we refer to it as the Berlin Wall because it's just so hard to go through. One thing that was funny we pointed out earlier is that we saw earlier is that it didn't take any effort for us to drop down and break through it as support. Now coming back up, we're expecting to see some resistance. So a point that we are watching right now is 51 cents. We get a close on the 4-hour or the hour up into closer to 52 cents. Then that'll make me think there's a better chance that we're going to come up here to around the 56 cents. Maybe close, if we get a close into 57, then we basically beat the Berlin Wall. But still, even then, if that happens, there's no telling how long that price would stay up here. Also, the same thing could happen for XRP, and a lot of times this happens before a Bitcoin drop. So we are also looking out for this to happen, is for us to come take out these highs, fill in these imbalances right here, and then possibly tank. So we're just keeping an eye on this. Like I said, taking it one candle at a time. There were a couple of other positions that we wanted to look at. So let's check them out. Now we're going to look at XDC. We dropped this inside of our signals channel or just a while ago for our subscribers. Let's go to the 1-hour time frame. On XDC, we saw a break of what looks like an accumulation. Now this is more in alignment with what we trade. We're going to consider this spike over here to the left, our liquidation spring, and this as our possible accumulation phase. And let's see if we can find our sign of strength. Here's our sign of strength. Out of here, had a really big bearish candle right after that. So we're looking for a break of this descending wedge into support, or the order block. We call this the order block down here. So we just dropped this in here. If you're seeing this is not financial advice. We are just pointing out what we have in our trading course, and this is a move that we have been trading for the past year, and it has about a 75% average percent win rate when you spot it correctly and you line up your confluences, both fundamental and technical, and you get the entry. We've been trading the breakout. A lot of the times what will happen is that we will get a breakout and then we'll get some kind of head and shoulders action, inverse head and shoulders in this case, since we're looking at a potential buy. If this happens, then this also would give us another entry, and that would be across a break across a neckline. Now, the chances of this playing out like this are slim to none, to a T, that is. But in one way, shape, or form, this either usually if it does play out, about 90% of the time, if it does play out, it will turn into an inverse head and shoulders, and sometimes a double bottom. But this is just for demonstration, education purposes only, not suggesting anybody take this. So we're just sharing and teaching through signals when we're doing this. There's more value in learning a strategy and learning how to read charts and why we are taking the setups that we do than you'll get on any amount of profits from any single trade. Here's our Dogecoin. We actually just entered Dogecoin. We did not get in here. So if anybody had seen this, then we did not take this. This would have got stopped out right here. But as you can see here, we do have a bit of a triple bottom. So we have this area lower, and this area higher. It's not the prettiest thing, but a lot of times this is what we're going to see. So we have a shoulder, a head that sticks out further, and another shoulder. To see this complete, we would need to see a cross on Dogecoin past 15.5 cents. We're thinking we are going to see a flash pump, but we're also thinking we could see a flash dump right after that. But because we are thinking that the market is going to give retail what they're expecting for when the halving is done, is that we see cryptos take off and never return. But I think only half of that may be true. We'll just have to wait and see what happens. Just a quick check back up on Gala. We put this on the 4-hour and we were up nearly 11% yesterday on this position. And you can see here that this will be our inverse head and shoulders, even though this isn't really looking like a descending channel or descending wedge, seeing it more as an equidistant triangle with a breakout. You can see how different the head and shoulders can play out. The inverse head and shoulders can show up in various different forms. That's why when we draw it with the arrows, we're not saying at all that's what we think is going to happen, because we know that there's so many different ways that it can appear. It's literally impossible to get it right every time. Sometimes you get lucky, but most of the time, it ends up forming in a way that you didn't think about. Whenever we see it and it does play out to a T the way that we saw it maybe happening, then we're just counting that as luck. So there's no way to predict the market at all. The best that we can do is line up our confluences, practice good risk management. We use fixed variables, and when we set them, we forget them. If it hits SL, great. If it hits target, great. It really doesn't matter which ones hit. I know in my head when we're trading, I don't have a clue what's going to happen on any one of these, and you don't have to have a clue. Whenever you're trading a 1 to 1.5 risk to reward ratio and your win rate's at 65%, you're winning more than you're losing each and every time, twice as much or 1.5 times as much. If you're trading a 1 to 1.5 risk to reward ratio, then you can be profitable, clearly profitable at a 50% win rate. So you don't have to win 75% to have 75% of your positions. You just need to practice good risk management. And a lot of professional traders are successful with a 40% win rate, but those traders are practicing a different type, not a different type, but a different kind of, I guess it's a different kind of risk management, and their risk to reward is usually better. So they're looking at getting 1 to 3, 1 to 4, or even greater. But the more that you increase this, the more that you increase the reward, the lower your win rate is going to be typically. Now, that's not all the time. There are several people that have it much better than that. They are seasoned veterans, and they have a different appetite for risk. So they can take getting stopped out 10 times, before they hit a target. They're using 1 to 10s or whatever the case may be. Anyways, that's going to do it for this one, you guys. If y'all have any questions, just reach out and holler. Be sure to come to Market Misfits Academy on Facebook. Find us on our Facebook page at Market Misfits Academy. Be sure to like, follow, and subscribe if you're seeing this on YouTube. And then if you got any questions or anything, just reach out and holler, and we will see y'all on the next one. See ya.